Hello TBE family, and welcome to the TBE podcast, where we share thought-provoking stories, strategies, and ideas, as well as engage with insightful leaders from a wide range of fields and businesses within South Africa. If the topics of entrepreneurship, business, startups, property, marketing, or finance interest you, then you've tuned in to the right place. Hello and welcome back to another episode of the TBE podcast. Alexi has over 16 years' experience in financial markets. Having started at the National Treasury of South Africa, he moved to Standard Bank CIB as part of the capital markets team. In 2017, Alexi co-founded Alinea Investment Management with Nic Spetsiotis. Initially focusing on alternative credit investment, this business has evolved with its clients' needs. And when they felt the market and infrastructure was ready for offering their clients crypto services, they partnered with the team at Cratos Capital to launch their venture, Cratos Digital Assets. So Alexi, welcome to the TBE podcast. We are very excited to have you with us today. I know from personal experience, discussions around digital assets and crypto can be quite challenging to understand, to say the least. So thank you for being here to share your valuable insight and experience on this topic. Are you ready to jump into the questions?
Yeah, pleasure.
Awesome. So I'd like to start off with the term decentralized finance, or DeFi. I've heard it a lot in the crypto space. So maybe as an expert in the field, how would you explain what fluid and decentralized asset management is and how it differs from centralized finance?
Cool, thanks very much. Well, expert is a very generous term. Thank you very much for that. If we start with the original genesis concept of Bitcoin being a distributed ledger, decentralized, governed by programmable code, as a way to create a means of exchange, a currency that could move between various people, DeFi or decentralized finance is just an umbrella term for a variety of applications and projects built on the public blockchain that are geared towards disrupting your traditional finance world. So, for example, using this concept of a decentralized ledger to do the work that previously banks would have done, insurers, fund managers, in that sense. So, projects are increasingly developing venture capital, fundraising models, savings models, insurance models. So all of these products that we have got exposure to in our day-to-day lives are gradually being moved into this decentralized world, with the goal of offering them those same products. And it's a very broad term, but something that's moving at a very, very, very quick pace. Something we're very excited about.
Am I correct in saying, based on your explanation there, that decentralized finance is a little bit more systems-based and centralized finance is a little bit more human-centered?
Yeah, absolutely. I'd certainly say that to a large extent. Speaking from personal experience in a corporate, having been in a corporate, there is a lot of human interaction in the decision-making process. There's a lot of collaboration between team members, and with that comes personalities and views and biases and all of those things as well. In the decentralized space, the concept is that the logic is programmed. It's systems-driven, it's bias-agnostic, view-agnostic. It is encoded into a particular contract and allowed to work. If for whatever reason there's a vulnerability or it doesn't work out as intended, many of these projects have processes to evolve and adapt. And the open nature of the blockchain makes it quite easy for guys to identify something that needs improvement and to then start working on building variations to it to improve what may not necessarily be perfect in the first version.
Okay, I see. And then maybe one last question touching on decentralized finance. Is that a crypto term, or was it here before the crypto industry?
I certainly haven't come across it before crypto. I'm sure that in certain financial subsectors, this concept of a decentralized financial product offering has been around. But whether or not it was called DeFi or has become as popular as what the crypto space has made it, I don't know. I think even if it did exist before crypto, I think it'll be remembered because of what crypto has done for the space.
I like that answer, because that's definitely how I found out about it.
Sure.
Thanks for shedding some light on that topic. Going a little bit deeper into the crypto versus traditional financial assets, would you care to elaborate on some of the key differences? I know, based on some of the research I did on Cratos Digital Assets, you said there's a merger taking place. So I'd like to understand that a bit more, if you don't mind.
Sure. So, where to start? Firstly, traditional financial assets encompasses such a broad range of risk and reward offerings. You've got from very safe and secure investments to very high risky, very volatile investments within your traditional finance space. Tech stocks, cyclical mining stocks, exploration stocks. So in our traditional finance world, we always naturally found ourselves inclined towards the slightly more alternative assets, or equities, where what we determine to be an asymmetric risk return. And by what we mean by that is there may be a risk of a small loss, but the potential for a large gain substantially more. And we look for that asymmetry, a little bit of downside potentially, and hopefully a lot more upside. So in that respect, crypto assets aren't too dissimilar to certain sectors of the equity market. As I mentioned, mining exploration, cyclical commodity stocks. You go through these very big boom and bust cycles. So we felt a sense of familiarity when we looked at cryptos relative to some other pockets of assets that we've traditionally looked at before.
Interesting.
But I mean, in terms of differences, the most obvious one is that we're still very much in the early days of crypto. And whilst accessibility to the crypto space is arguably easier now for the average investor than what it was maybe in the early days of Silicon Valley, where it was a very closed network of venture capitalists, etc. Generally, we're seeing the nature of these crypto projects being decentralized. They need a community to be viable. So we found much easier accessibility into new projects, into early projects in the crypto space that you won't always get the opportunity to get into in the traditional equity space. That said, though, there is an emerging class of crypto venture capital funds that are growing, as in any industry. But accessibility to projects is probably one of the biggest differences. Another stark difference is the openness of everything in the crypto space. All your contracts are public. Every transaction is on a public ledger. It's all on record.
On the blockchain.
It's on the blockchain. So everything's open source. There is no black box, so to speak. You might need to have some technical acumen more than finance to be able to go through and read all the code and to review the smart contracts and whatnot. But if, as I mentioned earlier, if the guys don't like a project, they can take the code, cut it, adapt it, and launch a new project. Which is the concept of forking, which is very different to traditional finance, where you kind of put money into a project, there's a bit of a black box exercise, and you kind of go on the good faith of management and accounts and reports, etc. So, we find accessibility very interesting, and we think that the combination of openness together with the huge amounts of intellectual property that's moving into the space. Some of the brightest minds in the world now are pivoting from traditional finance into crypto, from traditional programming into crypto, from you name it. That for us gives us a view that this market's here to stay in the long term. And in terms of
those points, sorry for interrupting you, from those points they are transitioning from traditional
100%. And then in terms of the two merging, and this is where we see ourselves playing a role. What we call the on-ramps, the process by which a new client gets into the crypto system, and some of the checks and balances that investors have become familiar with in traditional investing just isn't quite there yet in the crypto space. It's not as easy to open a crypto wallet as it is to open an online equity brokerage account. So the user interfaces are still evolving. A lot of the interoperability of different platforms is still needing to be worked out. We take it for granted in South Africa, trading shares, for example, whether it's American, European, Japanese, or South African, it's all one and the same. Operationally, these cryptos are on this platform, these cryptos on that platform, this platform needs another interface to connect with another platform.
User experience is a little bit more adept for the
absolutely
space.
So for a user who sees the opportunity in crypto, wants to have a small allocation of their investments allocated towards crypto, we kind of offer an intermediate step where it's relatively familiar to what they're normally used to. And a lot of those user interface challenges are stuff that we've got a dedicated team at Cratos Digital to look at and to spend time on and to try and make that process a lot easier for our clients.
That's amazing. And that actually leads me on to my next question. So I'm going to skip this one and jump straight onto the next one, and then I'll go back because we're talking about on-ramps here, right? So what advice would you have for people listening in if they're stepping into the crypto space for the first time? And I thought that was you speaking about the on-ramps, so let's just keep going on that section there.
Look, it's relatively easy. The first one is start small.
Okay.
But start. Make your first purchase. Find your local wallet provider, do the first EFT, do the first purchase, get the hook into the system, so to speak.
Process
just with a basic local exchange and a local wallet, just to familiarize yourself with the initial process. Keep it simple. Don't let your first purchase be a highly complex protocol that's going to be launching in a few years' time. Stick to some of the biggies. And then once you're done with that, then contact Cratos Digital, speak to one of our guys, and they'll then help through guiding clients through more complex strategies.
Of course.
But we always tell everyone, just start now and start small.
So start small, but choose one of the biggies. What if you were to name maybe one or two that people could look into?
It depends on what platform you're going to use, but if you're going to be doing your first purchase, stick to an Ethereum or a Bitcoin for that initial transaction. Keep it safe, keep it simple, and then there's a natural tendency that human beings have to learn more about an industry once we've got a bit of skin in the game. And the natural inclination to read up more about the crypto market and about the space will come naturally once there's a little bit of a commitment made.
Curiosity takes over.
100%.
Yeah.
But look, the space is very volatile, so we keep on saying, always start small. This should always be discretionary income. If it had to go to zero tomorrow, would you be upset? And that's kind of the parameters that it should be for your first purchase. It's more of a test case. And then from there, the process will take over you.
So if I could just create a hypothetical scenario, I'm brand new, sticking to everything you just said, keeping it simple, going local. Once I've done my first purchase, how long do you think it would take, or would you step in to build my confidence doing these transactions as Cratos Digital?
Look, we would do it from as early as you wanted to. We normally find the timeline from someone expressing interest in cryptos to their first purchase to wanting to evolve into slightly more complex opportunities is relatively quick.
Okay. Interesting.
It is a lot faster than certainly in traditional finance. Someone wants to come into equities, they're in equities. Yeah, that's it. So the news flow in crypto is a lot. There's so much happening all the time, and it's very easy for guys to really dive into that space. So yeah, you wouldn't necessarily have to sequence it. Do your initial purchase, do a small one, contact one of our Cratos Digital guys, and they'll guide you through the process, even for that initial first purchase. Yeah, it's always helpful to have someone talk you through the basics.
Definitely guide you through everything. Make sure you're making the right decisions, investing in the right places.
Yeah, absolutely.
You were speaking about your services a bit there, so let's go into that a little bit more. Leaning into the offering at Cratos Digital Assets, I saw that you have 4 investment strategies: listing, trading, long-term holdings, and staking. Do you want to just give us a little explanation of each?
Sure. So the first one, probably the easiest, is our long-term holdings. Okay. Yeah. Gained the term HODL has gained a lot of popularity on the interweb.
Hold on for dear life.
Hold on for dear life. And yeah, this premise holds when looking at the performance of a lot of crypto assets. The main objective of this strategy is to kind of avoid short-term volatility. Okay. We've picked a handful of about 5 or 6 long-term coins that we think will be around for a long time, and we've got certain proportions, and it's buy and hold. And those are a long-term play. And we review it on a fairly regular basis, but we're not looking for short-term gains on that aspect of the portfolio. So that is the one component of it, and it's a relatively small part of the portfolio, but it's a key component. The next component of the second strategy that we deploy is a trading strategy. Okay. Most of the team at Cratos and my partner at Alinea have come from an equity trading background, short-term volatility trading, and cryptos demonstrate some very classical volatility patterns over time. Which
predictable patterns.
Relatively predictable. And certainly for someone looking for short-term opportunistic volatility trading, okay, the crypto market is great for that. Okay. And so we've got a fairly unique skill set of traders who trade the crypto market like they would have traded any other financial asset class. And we look at this strategy as more to take advantage of short-term volatility when there's been a real dislocation that we believe isn't justified in the near term that will work its way out of the system. Sure. So yeah, the long-term portfolio is buy and hold, forget about it. The trading portfolio is a little bit more active and busier.
Is that almost day-to-day trading?
Day-to-day, it might be weeks, months, but it's
monitored regularly.
It's certainly one of the more active parts of the portfolio. Okay. The third strategy we deploy is listings. Mm-hmm. So much like in traditional finance, new projects need capital. And as the market has developed, a project will want to raise money. We will contribute to the funding of the project. Okay. And in exchange for that project, in a period of time, 6, 12, 18 months, 24 months, we will receive whatever those new tokens are that are coming out of that project that we are backing. In equity terms, you'd think of it as like a pre-IPO, sure, investing and then hoping that at some point you get a project that comes out of it. We've obviously developed very strong relationships with incubators, with influencers in the crypto space, and we've got a fairly rigorous process that we formulated over time. So we get access to a lot of projects. We run them through the filter, decide which ones pique our interest, and we'll take selective exposure to certain new projects. And we're quite proud of our track record on the projects that we've backed thus far.
That's amazing.
They've all come to fruition. They've all done phenomenally well in terms of returns for our clients.
In terms of incubators, Are these local, abroad?
All over the place. Yeah, I think the nice thing about crypto is you'll jump on a call and there'll be someone in Asia, someone in Scandinavia, someone in Europe, someone in Cape Town, and someone in the US and Latin America. These are multinational teams,
All working on the same
project. This is a proper global industry. I think the whole concept of decentralization by its very nature leads itself to guys working all over the world collectively. So most of these incubators, even if it is geographically located in a particular country, you're going to hear many, many very different accents. The teams are everywhere, absolutely. It really is very cool. And so that's the listings, new projects. And then the fourth strategy we take, which is a perfect example of DeFi, is our staking strategy.
Staking is actually incredibly interesting to me.
Yeah.
I would love to hear how you explain it.
Look, the easiest way to explain staking is to think of, when these blockchain projects rely on multiple participants validating and supporting the network. So staking is a method where investors can provide tokens to a particular platform or protocol that allows it to perform its function of securing a network, and in return for committing your capital to a platform or to a protocol, you earn interest. So, savings products that traditional banks would have offered, the crypto equivalent would be staking platforms where someone can give their money across, earn interest at certain percentages, either in the same token that they've lent or in various tokens that are different to what they've lent. So there's a lot of technicalities and complexity in actually running a staking strategy, but the concept is relatively simple. We're going to commit some capital, it's going to be used to support a project, and in return, we're going to earn some interest. Another variation or type of staking strategy is what they call yield farming, which is very much the same type of idea, but normally for decentralized exchanges. So in the equity concept, you would have a Johannesburg Stock Exchange that you would buy and sell all your shares from. In the crypto space, there isn't a central counterparty. Many of these exchanges are what they call decentralized. So you need a pool of liquidity to facilitate that exchange. So the same logic, you provide capital, let that exchange use that liquidity to facilitate buying and selling of cryptos between market participants. That generates a fee, and you then earn a percentage of those fees generated by the platform. So we view yield farming and staking as lower volatility, interest earning type of investments to supplement the trading, the long-term holding, and the listings. And then when we combine all of these together, we hope to achieve the better risk-adjusted returns for our clients than traditional finance.
So that would be 4 investment strategies to create a stable portfolio with varied risks, eh?
Absolutely, 100%, yeah.
Staking is incredibly interesting. I love how you explained it. You explained it very simply, but it does seem incredibly complex, eh?
It is incredibly complex. The same issue I mentioned around user interfaces, the mechanisms that are deployed. The projects are really cool. Yeah. The returns are really cool. Getting into it is relatively difficult. We've got a dedicated team just looking at staking, and the skill set required for that, it's slightly different. You need to understand programming. You need to understand where potential vulnerabilities may be in certain contract structures. But it's something that's certainly here to stay. The returns that are being offered in this space are materially higher than what guys would get in traditional finance, interest-bearing type of investments. Yeah. So it's only a sector that will grow. But with all sectors that grow, more money will come in, the returns will gradually decrease, but the system will become more stable, more rigid, and hopefully better longevity for the market as a whole.
So, that's a lot for my mind to chew on, to be honest. I'm going to jump to our last question here. Second last. We have to fit a TBE question into the podcast, considering we're sitting in this beautiful room, the tequila room. So, being on the TBE podcast, I'd love to take a moment to chat about your relationship with TBE. Maybe how has it gone up to this point? We're sitting in the V&A waterfront building and it is absolutely beautiful. Maybe give us a little bit of a journey. How did you enter into here and how has it been so far?
Sure. So yes, we based our crypto ops down in Cape Town at your beautiful building here at the waterfront. I mean, apart from it being one of the most beautiful cities in the world, and this is from a diehard Durbanite, there is definitely a bit of a crypto hub developing in and around this Cape Town area. There are some global, well-recognized crypto developers that have come off our shores.
Well, am I correct in saying the Luno building, they are a crypto exchange? And they've got a nice building right around the corner here.
100%. And some of the big DeFi projects are South African originated. So when we decided to launch this venture, we naturally got pulled down to Cape Town. It just happens to be where a lot of the skills are. And that was one of the biggest drivers to set ourselves up here. We've always been a social team. And much of what we do in the investment space comes through impromptu engagements with co-workers, clients, guys in the office next door. So what we really like about the whole TBE kind of setup is the eclectic mix of people. Not everyone's a finance person, but not everyone's an artsy graphics designer. There really is a nice mix of tenants in the building, and we've always said our best investments never appear on a meeting agenda. The best investments come out of left field, out of a random discussion at the water cooler. So we're certainly very happy that we've in a shared space with other people, and gradually getting away from the working from home in isolation kind of model. We really missed being with other people. So it's been a few months for us here. Nice. Really enjoyed it. Don't plan on going anywhere anytime soon. And hopefully we'll build our presence as our business grows.
Well, you said you're not working from home anymore, but it feels like home when you step through that elevator, that's for sure.
Yeah, no, absolutely.
Left field, hey? Last question. I feel like throwing a curveball is what it's all about. NFTs, non-fungible tokens. What are they?
Okay, NFTs. Look, we never dismiss anything out of hand. The price of some of these NFTs, which for those that aren't aware, is effectively a non-fungible token, is a one-of-a-kind digital image. Okay. And certainly, they've caught a lot of media attention. Some of these NFTs have sold for mind-boggling numbers. Yes. But to be honest, on a serious note, this whole metaverse NFT paradigm, it's already here, and it's been here for a while. I can attest, based on my son's usage of my credit card, on PlayStation Network, on Roblox, on game credits for booster packs, for whatever there is definitely potential economic value in this space, for sure. And the seeds of this market have already been planted in the gaming context for the last 15, 20 years. The minute you had games where you had exchangeable items, that concept started getting it. That was the genesis of it. Okay. So it's definitely something that we've looked at very closely. what we look for is we think that there will be some interesting use cases for NFTs. In certain cases, like in the gaming context is the most obvious, a token that can be sold or exchanged for monetary value across games or across networks. That seems like it's almost imminent. And we've also seen some really cool use cases for very rare, limited edition physical products that are sold to a handful of buyers in an NFT format. So they will buy an NFT of one of 50 bottles of super rare whiskey. And that NFT,
the bottle of whiskey comes with
you get your NFT as your claim on that bottle of whiskey, and then when you would like that bottle of whiskey, you'll burn the NFT and take delivery of your whiskey.
Whoa.
So like some really cool mechanisms, and I think we're going to see many consumer-focused brands launching products that you'll need to get exposure to by buying an NFT almost as a voucher or a claim on that product.
Tickets for events. I've seen
tickets for events.
Lifetime NFT tickets.
Absolutely. So it's easy to look at the crazy aspect of the market, which is an animated ape selling for millions of dollars. But our responsibility as investment managers is to look at every potential opportunity, sift through the noise, and see where we think there could be genuine utility and potential value in this space. So it's something we're very, very interested. We monitor very closely, and
monitored, but not an investment strategy yet.
It's something we've looked at, and we've taken some small exposure to certain projects that we think have got a utility map outline in the future, whether it's in most cases in gaming, in the gaming space. But we think the space is moving so quickly. There's so many new things coming to the space. You kind of you can never fully commit to all your eggs into one project now. So we've invested a little bit, and we keep looking, and every week there's a new project coming, and a new project, and a new project, and we'll work through them and hopefully make the best call for our investors.
Okay, nice. Well, it's been really great to chat about all of this crazy digital space. Eh? That's probably how I would sum it up. I mean, thanks for sharing with us.
Absolute pleasure.
I feel like we could just start this conversation all over again. I could ask the same questions and be getting completely different answers. There's so much to talk about, but maybe we can save that for an episode in the future.
We really look forward to that.
That's all for us today, Alexi. I just wanted to say, thanks for being here with us. Really a pleasure to have you. The conversation, it's been a deep dive. I'm certain our listeners have got a lot of value from it. And you mentioned earlier, contact us at Cratos Digital. So maybe I'd like to end off by saying how exactly they could get a hold of you. Do you have social media platforms?
Best place to start would be to go to our website, www.cratosdigital.io, and there's contact us forms on there and phone numbers and whatnot.
Perfect. Well, guys, thanks for your time, and catch you on the next episode.